This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Middle East crude prices in Asia fell to their lowest level in months, despite OPEC Plus production cuts, traders said, as Asian refiners held back spot purchases and China and India binged on cheap Russian oil. Benchmark Dubai crude's premium fell to a 4-month low of 70 cents a barrel above Dubai quotes on Wednesday, while Qatar has set Al Shaheen's July term price at a 27-month low after increasing supplies. The fall in prices may prompt top exporter Saudi Arabia to cut prices for its term cargoes to Asia for a second straight month in July, traders said.
Oil prices fell on Friday, as investors worried that U.S. politicians will fail to agree on a new debt ceiling and trigger a default that would hurt the economy and reduce fuel demand. Brent futures settled 28 cents, or 0.8%, lower at $75.58 a barrel, while West Texas Intermediate U.S. crude for July expiry fell 25 cents, or 0.3%, to $71.69. The less active U.S. crude contract for May, due to expire on Monday, closed down 31 cents, or 0.4%, to $71.55. Brent and U.S. crude prices nevertheless notched their first weekly gains in a month, with the both benchmarks rising about 2%.
Moving on to the top news in the energy sector.
Group of 7 rich nations must take the lead in phasing out fossil fuels, the leaders of 7 countries including the Netherlands and Chile have said, attempting to build momentum for a global deal this year to gradually quit oil, coal and gas. Countries including the 27-member European Union are hoping all nations will agree at this year's UN climate talks to phase out the fossil fuel consumption causing climate change, reviving an idea that gathered some support at last year's climate talks, but was blocked by oil and gas-rich countries. A meeting of G7 leaders in Hiroshima, Japan, which began on Friday, is seen as a test of the appetite among the world's advanced economies to do this.
U.S. energy firms this week cut 11 oil rigs, the most in a week since September 2021, energy services firm Baker Hughes County said in its closely followed report on Friday. That follows last week's cut of 17 natural gas rigs, which was the biggest drop since June 2020. The oil and gas rig count, an early indicator of future output, fell by 11 to 720 in the week to May 19, the lowest since May 2022. Baker Hughes said that puts the total rig count down 8, or 1%, below this time last year, the first time since April 2021 that rigs were lower than the year-ago level. Next, we have the top news in metal markets. Britain published plans to ban imports of Russian diamonds, copper, aluminium and nickel on Friday and announced new sanctions against Russia, targeting companies connected to the suspected theft of Ukrainian grain. The United States and Canada also announced new penalties on Russia over its war against Ukraine. Washington imposed sanctions on gold producer Polyus and the Russian business of its peer, Polymetal, which would further damage Russian gold sales already hit by Western sanctions and restrictions. The UK import ban, however, will only have a muted impact as Russian exports of those commodities to the UK have already dropped after the imposition of tariffs.
Global nickel prices are poised to decline over the next few years as top producer Indonesia ramps up supplies and production costs fall, industry watchers predicted at metals conferences this week. Indonesia, which made up 38% of global supply in 2021, is set to quadruple its nickel capacity to 1.2 million tons between 2021 and 2025, said Chen Yan, head of basic materials and engineering research at CICC. As production growth outpaces demand, the benchmark 3-month nickel contract on the LME is likely to fall 7.5% this year to $23,741 a ton and sink below $20,000 a ton in 2024, according to CRU Group.
We will now look at the top news in the agricultural sector.
Kyiv would consider allowing Russian ammonia to transit its territory for export on condition the newly renewed Black Sea grain deal is expanded to include more Ukrainian ports and a wider range of commodities, a government source told Reuters. The comments are the first time Kyiv has publicly laid out its stance on Russian ammonia, which Moscow wants shipped via the Black Sea under the agreement. The Black Sea Grain Initiative, brokered by Turkey and the United Nations in July last year, facilitates the safe navigation for the export of grain and related foodstuffs and fertilizers, including ammonia, from 3 Ukrainian ports.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.